Good morning. It's Harvey Jackson. Just going to go through a few of the news items, just concentrating a lot more on weather, percent seeded, as percent seeded across the provinces move ahead, then the weather starts to become the next factor that is most important. So we'll just have a look at Manitoba crop insurance. Our Manitoba government put out a percent seeded. As you can see here, we're saying 95% seeded, where normally 5-year average is 85, so it's a bit ahead of pace. What you might want to note is where the crop conditions are. They're 95% seeded across the provinces, um, and at the 4 to 5 leaf stage as well. Some that are well advanced. Canola seeding's at 90% complete, and some are at the 5 leaf stage as well. Flax is around 75% seeded, and sunflower is about around 98. Soybeans at 93%, and dried beans at 90. Palm oil rebounds anticipation of India's strong demand. That's being a little bit hopeful as of right now. Here's another just a little bit of a look, and this is what I would be starting to pay attention to is where the weather is maybe got anomalies or whatever. So if you get a drying in this area, there's going to be corn and soybeans, and we're going to have wheat and canola with some issues as well as we dry out if there's going to be a drought. You can see here the active weather moving across the U.S. Um, the band that's hitting some of those areas, if it's significant, it could actually be more bearish, but depends on heat that shows up later. You can see here, this is a extended forecast all the way out to June 18th. There's some holes in this forecast as far as the European artificial intelligence model. This is Darren Fesser.
November beans total 35%. Next target working here at 1083. Same type of thing. Breakdown on the rising wedge. Support but found between that 50 and 62. Look for 1034, 1030 potentially to be your next area of potential resistance. I do think the story is about old crop, or excuse me, the story is about new crop beans instead of old crop. You look at the soy meal market really depressed in China right now as more of those Brazilian shipments come online here. Export sales still running year over year. Total commitments still looking pretty good here, not only just on the corn and beans, but also on the wheat here. We'll see, knock on wood, that trend does continue. Again, we do have some of the higher priced front month beans in the world at the moment. Taking a look.
So to just wrap up there, he's just showing some of the technicals on beans, and I will show a couple other clips from the lakefront commodities as well. If anybody wants to sign up, just let me know, and let them know that you referred by me. You'll get a little bit of a break if you wanted to get some of his information as well. Canola, you can see that it's basically flat in the front month and slightly down in November. Rapeseed is down just slightly. Soybean oil is unchanged when I took the snapshot. Crude oil is still tracking sideways here. Soybeans up a little wee bit. Soy meal down, and your wheats are all trying to take a little bit of a recovery and go up. Of note, I think oats. I didn't show it on the chart, but it's been on a bit of a tear for the last few sessions or last week or so, and it's been trading up here. So, and Canadian dollar is green again. So if we just look at what price action we've had on the July contract, you can see that we've had that pullback and half of that recovery yesterday, and looks like today we're going to try to trade a little bit in the green or start off there anyway. Still, if we were to get up into these, back into this trading range at the top here, we definitely would be leaning on getting some more or executing on the last bit of your crop to get sold. So here's your November contract. It's recovered just over half of its leg up. I was talking to one client there yesterday. He did go short, but if he gets back up there, he might try to re-own again, or maybe re-own a bit more as well. The differential between the old crop and new crop, we're trading around $22. And you got to remember, we are in June. As we get closer and closer to the mid of this month, we're going to be rolling out of that contract. This is just your rapeseed, and you can see that you got some sort of uptrend, but it doesn't look. It looks a little bit messy here, but it's still a decent trend for the coming off of that support there. Crude oil, palm oil looks like there's maybe finding some demand in the story that I had quoted. It was the India looks to be buying some of the palm oil. Soybean oil futures. Looks like you've got some sort of support at this 50% retracement value, and the 200-day moving average seems to have added some support. Here's your November contract, and again, that 50% retracement value. Crude oil, we're at this area. If we break out, we're probably into that 68 kind of range. The Canadian dollar, this is pretty resilient, and it seems to be sitting here waiting for maybe some more world news. Here's a little bit more from Darren.
Here is the July corn. Again, what we're looking at here is obviously a momentum that still continues to favor the bears here. However, when we bring up the MACDs, the MACDs may be starting to shift back here. We've seen a lot of consolidation here. We're going to watch this very, very closely. But more importantly, this Fibonacci extensions usually, and I preach this a lot, between that 50 and 62 is usually when we find some support. We hit it yesterday, bounced off it. Now we're trading green here today up 2.25. Again, I think the biggest thing here, we need to watch where that 9-day moving average and 5-day. 5-day being the white line here, that is going to be resistance, and it has been ever since we started breaking down below it on May 28th. So watch 442.25 here today, 442 half. Get through here. I think there's a push back towards that 450 on that July board. That
Here's maybe a little bit of an explanation on wheat as well. And again, the wheat that he's talking about is Chicago wheat.
get that July wheat here again. As long as we can hold this 50 and 62% retracements, I do think a move back towards this mid 550 level is probable. Now again, we got to hold this 536 here today. That is the 20-day EMA. We've held it now for 2 consecutive sessions, so that confirms a trend change here. As long as you hold it, if you don't hold it today, it starts all over again. You got to get 2 above it here. If you get to close below it, then we got to watch tomorrow's trade to see if you get another close below it. We are watching.
So here's a little bit of just a snapshot of where the bulk of the spring wheat is grown, and you can see that 51% of the spring wheat is grown in North Dakota, 18 in Montana, and then 13 in Minnesota, and then South Dakota. And when we get these crop rankings that came out on Monday after the close, you can see here that they actually talked about the shift that actually shifted this 5%. And what it is actually North Dakota with the 51% shifted the change. So North Dakota with an 11% improvement made that 5% improvement because of it holds the biggest part of the or the biggest quantity of the wheat, spring wheat grown. As I talked about this a couple of times now, we got to that resistance value. It looks like our 200-day moving average is a value that doesn't want to trade it, consistently above it for very long at all. And you've got your 10-cent increments every time here too. And if you look at this down here as well, that would be a sell signal when you get these to cross over as well on the slow stochastic. Here's your November contract, and you can see that we've got these values here. But what importantly I want to point out is this 50% retracement value too that the market is currently sitting at. So if we can actually get above that 61.8 and trade into 78%, and then we're on the races to maybe get above that 100% retracement up here. Here's your Kansas, and this is the one that Darren was talking about a little bit here. Just that, and your Chicago wheat here, and your corn needing some support here upside, but it's still got some pressure down as we see. Even with this green day that we've seen, we need a little bit more trade action to kind of bounce off of that trend. Lean hogs. I don't know if anybody's been noticing, and I don't always pay attention to it either, but it looks like we're making a higher high for the last 6 months here. And that's all I have for you today.